Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep.
All right.
With your host, Joel Kulina.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
To buy or not to buy? That is the question. Whether it is nobler in the mind to suffer the slings and arrows of outrageous short sellers, or to take arms against a sea of troubles, that is what we're going to talk about today. Good morning, everybody.
Spencer Shakespeare this morning. That's impressive. I did not do well in any of the show. Did you read the books, Spencer, when you were in class and you're in your English class? You probably read all the books, didn't you? The Shakespeare books that you had to read.
Why would you read
the mandatory
books?
Shakespeare books? I never read them.
Cliff
did
Notes.
You? Did you read them, Joel? Joel, no way read
Cliff
them.
Notes.
Cliff Notes. Cliff Notes. I bet you Spencer did read them, though. Spencer probably enjoyed them, too.
Some more than others.
Some more than others.
Yeah.
Anyway, like Romeo and Juliet, and there was like Hamlet we had to read. I didn't understand any of them. Like I couldn't obviously I'm not smart enough. I couldn't understand any of them. So I did not appreciate Shakespeare. But you know what? If I did read them, I think Spencer just did a fantastic impression of William Shakespeare.
Thank you. Yeah, my old pal Bill. That is the question today, to buy or not to buy. If I can quote Joel from like 20 minutes ago, he said today is the most important day for the market ever. Whether or not that's true is really up for debate. But we're going to talk about yesterday, the sell-off, the overnight rally, what it means going forward, what you should do today. We have a couple of individual headlines, Micron, etc. But the overall market will be the theme of the day. Joel Kulina from Wedbush Securities will be our guest at 8:35. A lot to get to before I throw it to Joel. And before I bring on Joel's charts, I just want to remind everyone that coming up next is the Benzinga Small Cap Healthcare Conference. Day 1 of 2 starts today, right after this show. We'll be joined right off the bat by Mark Charest and Paul Uke from LifeSci Funds. And we're talking healthcare, we're talking the sector, we're talking individual stocks all day long. bzsmallcap.com. Let's bring up my overlay if I have it there. There it is, right? bzsmallcap.com. Winner free year Benzinga Pro. Go to that website, check it out. That's going to come up right after this show. Hit that like button for Joel and his charts. They're on the screen. Joel, how are we doing this morning?
To sell and to sell short.
That is the to sell or to sell short. That is the
or to do both.
I agree with both.
Or
sell short.
It might be.
That's what I'm looking at.
It might be too obvious, Adam. Though
it really is. Like I woke up and this is a hit. The rally. This is a hit the bid market for sure. Go ahead, Joel.
I got up. I looked at my phone at like 5:15, and we were trading over 43.70, and I couldn't help myself, and so I got up and hit a bid. No big deal, and I was in the pool by 5:35.
Hit the bid, then hit the pool.
Yeah, we caught a bid. Yeah, week close. We caught a bid. We didn't even see that closing price from yesterday. 45.25 is the low. We got to 78.75. Not much up here, folks. The intraday high from yesterday was over 4,400. So I'm just using this 78.75 as a target for any longs. And if we get beyond that, I won't, not necessarily shorten it, but I'm not going long above that level. Crude down 43 cents after making a new high for the move at 74.85. Gold laboring at the 1750 area, up $6 at 1743.50. Silver laboring at the $22 level, down 16 cents at 22.30. Bitcoin up 940. Quiet old Bitcoin here at 42,540. Ethereum's kind of sleepy too here, finding support, up $91.75 at 2,940. There's a look at some of your commodities and futures. Spencer, what do you got? You got some fancy graphics for us? What do you got going on?
Well, yeah, the graphics are back today after a unplanned absence yesterday. But yeah, let's just talk overall market here, right? I mean, that's the question. We had the headlines. You've all seen them, right? Worst day for the S&P since was it March? I'm losing track now. It was March, or the Nasdaq was March. The S&P was May. The Russell, even the holier than
The
thou
Russell went down.
I know.
Oh, then it's okay. Then the market went down if the Russell went down.
But
That's it.
so what do you do here now? Because if you come in overnight, as Joel just said, the S&Ps are higher, the futures, right? Futures are higher, kind of across the board. What do you do today? We just had a big old red day. Not the first time we've had that in the last week and a half, but and the last time we did, last Monday, we bought that dip, didn't we? The rest of the week we bought that dip. So now the question is, do we buy this dip, or is this a sign of more selling?
That
You
dip
already
was
you already
yesterday.
missed
Yeah,
the
that
dip.
was the dip.
That was yesterday at the close buying the dip.
Okay.
That was yesterday's trade. So I would say, yeah, you're not buying a dip. You're up 25 handles. That's not the definition of a dip. Yesterday was the dip.
Yeah, it was
So coming in and chasing this dead cat bounce, yes, I called it, I think is the wrong move. I think obvious Adam. Now, what did you say? Obvious Adam is an alliteration. What did you say, Joel?
to sell or sell short.
No, but Adam, you're saying that. But anyways, I think the
Obvious
very
Adam,
obvious
that's
trade,
a
and
book.
maybe it's wrong because it's just too obvious, is to sell the rip.
Can we just stop? And I just want to. This is going to bug me if I don't say anything. I think we need to refrain from using the term dead cat bounce for anything that is not like an asset that's going to zero, right? Like the dead cat being the key word there, right? The market is not a dead cat. Maybe the bounce, you might think that the bounce this morning or overnight is stupid, or a bounce to sell, but it's going to bug me anyway. I just don't think the market can be called.
I got it. Do you know cats, no matter where you throw them from, they land on their feet?
Hey, that's an analogy for the market. We'll
Yeah.
land on our feet.
Yeah, I don't want to tell my story about that. Lisa hates the story I have about that. Put it this way. This is coming to the end of the quarter tomorrow.
Mhm.
I'm gonna reserve, I mean, we're holding the low from last week, bullish. We're coming to the end of the quarter, right? And I did quarterly numbers. Let's see where they come out. I think this is gonna be the first time in a long time that, when you look at the quarterly numbers, we're going to close right at or below, my swing level for it. Definitely, we're a couple hundred points off the high, and we're a couple hundred points off the low. And I don't know, I just got this feeling about Q4. We've just made so many all-time highs and everything. I think it'll either just be a grinder, or we might have a little bit of a correction. I think there's just too much overhang in the market for us to rip up another 200 handles and make a new all-time high.
Okay,
That's where I'm at.
I wasn't on the fence, but now I'm very convicted, in my opinion, to sell the rip this morning. Spencer, can you please bring up my latest tweet that I just was putting together here in the background while Joe was giving his bearish thesis?
What are we looking at? What is this?
Bring it up. We're looking at the guinea pig indicator here.
Okay.
Guinea pig indicator, because the hamster indicator was all over CNBC yesterday. So I have the guinea pig indicator. So bring it up. We're waiting for it.
There it is. It's up.
The guinea pig indicator says, and well, I put the tweet out there too, but the guinea pig indicator says sell the rip. Sell the rip. So this is not investment advice. We don't give investment advice on the show, but I'm of the opinion that the guinea pig is smart. I'm of the opinion that I think you sell the rip this morning.
Is that just a head there? Or is that...
It's just that, yeah, it's a bodiless guinea pig. It's just his head. He doesn't have a body.
Wait, is that your guinea pig?
It's Spencer's guinea pig.
Oh, I didn't know you guys had it. Anyway, okay, moving on.
Anyways, so there you go. So that's the indicator right there. The hamster indicator is gone now. It's now the guinea pig indicator. Guinea pig says sell the rip. I don't know if he's right or wrong. He might be wrong, but I side with him, Joel. I think you side with him too. So we now have three out of four. Spencer's on the fence.
If
What's
you
Mitch
were
saying?
averaging
Mitch,
down
Mitch selling the rip?
yesterday, if you got caught yesterday and you were just averaging down, right? frowning and average downing, and you get this kind of move here, and it gets back to your average cost. I don't know what everyone's individual positions are, or the traders, or what we have, but man, I don't know if your stocks are going to get anywhere near yesterday's high. If they do, it's probably a pretty good sell. And anything that you're long, you know, if it could easily come down and test the close so easily. Apple up a $1.04. Could that come down unchanged? Microsoft, which is getting pounded. What about that buyback? Are they going to have to increase the buyback in Microsoft?
All I know
Never
is
even liked it.
Joel, the market is all about information. And
Yes.
yesterday you ask us on the show, and it's a tough call. It's like, okay, we got a dip. Do we come in and buy it?
Yep.
What happens? We have new information, and that new information was a serious flush. You caught a lot of traders early that were buying the dip and punished them all day. How many times in the first week of September, and like Ryan Dietrich said, history doesn't repeat itself, but it often rhymes. But how many times in early September when we started selling off do we get the flush during the day and then the rally overnight, and then the flush during the day and the rally overnight, and the flush during the day and the rally over the night? Well, yesterday we had the flush during the day, and now we get the rally overnight. So I'm going with the trend as my friend, and that trend has been to sell the bounce the day after a big flush. And I'm going to go with that again. I don't have any stats to prove it, but selective perception maybe on my part says that I'm not a buyer of the 25-point rally here today.
Not at all.
So just to clarify what he said, he said two things. He said he's not a buyer of stocks, and anything he's looking to trade today, he's looking to sell.
I'm selling out of stocks today, like
Right.
some stocks. Am I dumping my long-term portfolio? No, they're not. Long-term portfolio hat is not on. There's no hat on.
Okay.
I should have a hat on. The hair is terrible. But the day trader hat is fully on. And the day trader hat is saying I'm selling and selling short into this rally. That's just my opinion. I might be wrong. I might be early, but I'm lightening up into this rally. If I was buying the dip yesterday on some stocks, which I did, I'd be turning around and selling them today.
All right.
That's my opinion.
And now, does that apply? I'm not sure how we stand in pre-market. Well, okay, I just pulled on Microsoft, and I just saw, we're off the pre-market highs there. So, like, I know, like the FANG stocks we're all trading higher. I don't know if everything was trading higher this morning or not. I imagine not. For the stocks that
banks are struggling because
right,
the TLT. We've got this new market where the TLT is dictating the overall stock market move, and the TLT rallied. It's fizzling. You also have Evergrande. I think a lot of this rally this morning too, Spencer, just overall market talks, probably Evergrande. They, I don't know if you have the headline in front of you, but they did get some money.
There's another
overnight.
payment. There's another payment due.
It's due Wednesday, but they got some money overnight. They were selling some stock or selling something. I saw that, and they were getting $1.5 billion. So they got a little. The market tore off on that headline. It broke around 7:30. We ripped 5-6 points right on that headline. So I don't have it in front of me either, but there's an Evergrande headline out there. We know Evergrande was the start, but is Evergrande out of the woods here yet? I don't know anything about that. I think it's just the scapegoat for the market sell-off anyways. But technically speaking, I think I'm still a seller.
You know what? This is a good point from Easy in the chat. Someone to think about as well.
Easy in the chat.
Easy Mike.
Easy.
Wait, we got Easy. We got Easy Mike. Is that the same guy, or they just
no?
Easy is always there.
No.
there's Easy Mike.
Something to think about is the end of the quarter. The end of the quarter.
Yes.
I know. He said it.
I think the big boys are locking it in. I think they were selling at the end of last week. They're like, they want to secure their bonus for the year. Then they're gonna just ride off. They're gonna buy some safe stocks. They're gonna go into like the Johnson and Johnsons and the Pfizers and the boring stocks for the end of the year.
It's a fantastic point, though. Like, that is a concern if you're shorting stocks into the rally, and I think I'm lightening up into the rally. And I think with my day trader hat, I'm not going out more than a day or two here, because you do have to consider that Thursday, so tomorrow, would be end of the quarter, and that typically is usually an up day.
Yep.
So maybe you're selling the rally and maybe you're buying the dip at the end of the day if it happens like that. And obviously we don't have a crystal ball. We are literally trying to call the tape here. Sometimes
Inside
we do
day.
that, sometimes we don't.
Inside day.
Okay.
Inside day. Yeah.
Inside day. Well, that's a bold call, actually, because we had a violent candle yesterday. I think we do challenge yesterday's lows. We'll see what we do there.
typically when we say end of the quarter window dressing, what that typically means is you see some buying because all and the
Because
theory.
you want to have the good stocks in
Right.
your
Well, right.
portfolio.
That's the theory is that you want to show your clients, all the big managers want to show their clients, look at all the good stocks that we own now.
Yeah.
But in this case, they're saying, they meaning Joel and Dennis are saying the opposite, right? That Joel thinks that all these guys are going to lock in their profits tomorrow.
I think they have been. I don't
They have
think it's just like
Okay.
a one-day phenomenon. I think the selling that you saw at the end of last week,
Yeah.
Friday, I think Monday was a real rug pull too, right? The way we're up 10, 12 handles, and then we ended up all of a sudden we dropped 50 handles overnight. What's the last time we had a 50-point break overnight? It didn't look as bad because we were up 10 or 12, and then I don't know. If you're a money manager and you're looking at the chart, you're looking at the spider, you're looking at your returns, you're coming in the quarter, you have a Fed that they're dropping like flies. Um, you know, I,
Dropping like flies.
yes,
Tough.
I think so, man. I'm not going to go into this, but you got a Fed doesn't know what they're doing.
And they don't know what they're doing. I'm going to give you that.
Yeah, and and who knows? I'm not really worried about it. I've said this 1,000 times. Interest rates, okay, they're never going back. I'll say 4%, 5%.
You can't.
They'll never.
They can't.
It's mathematically impossible. So,
Mathematically impossible.
so so rates are going to go up a little bit. Like Dennis says, are you going to rush into bonds at 1.5%? Well, I guess it's better than losing money, right? If the market starts to go down. So I don't know. We've always had the rotation. We've always said selling this, we're buying this, we're selling this, we're buying this.
All
There
right.
could be a time where they just sell and maybe sit on cash, and then your client calls and the market's down in October, and you're like, well, we're up 18.7% this year when we made 22%. We bought the bottom last year, and I'm just let's just write it out. You don't owe, the market's not always going to rip up. It's not always going to crash. What the market does most of the time is it just grinds. And I think we're coming up to a grind to lower period.
What about
And-
Kathy? Look at
What-
ARKK.
Oh,
We
yeah.
haven't talked Kathy and given her some love in a while, although I don't know if we've ever given her love on this show. But ARKK, that's a serious breakdown through support, Joel. And I mean, the Kathy indicator says a lot of these little growth stocks, like it was a hammer, the high multiple stock day yesterday. And some of the biggest winners that have been the biggest winners were some of the biggest losers, like a CrowdStrike that lost like 15 points yesterday. Some of these stocks that are just completely loved, not just picking on Kathy because she doesn't own all these, but she owns a lot of the high flyers. They were hammering those stocks. So I think you get a little bounce in today. This ARKK sets up not bad now from the old support of 114 to 115 becomes new resistance now. No?
No, well, I'm looking at this. I'm looking at go back to the ARKK, and I'm looking at the monthlies here. All right, so you're still holding above what the 4-month low, so you could still say that it's holding support, but it's just hovering down there for too long. Where was that low? That monthly low when boom boom 107.39. So you're hanging by the here you chin chin 111.81. You took out a double bottom on the monthly at 113.40. I mean, this 111, we closed at 112.14. So, yeah, we're trading up a little bit, but there's more downside. And if any of you, maybe some of you did you bother to listen to the most informative half hour on the markets, on tech stocks, on growth tech and FANG yesterday? Both Gene Munster and Sean Udall, they are like, there is no buying the dip in these growth tech right now.
They don't want to buy the dip right now?
Nope.
Both of them.
Both of them.
Well, wait. They're
And
already
even the FANG.
they're already long up to their eyeballs. So all they're saying is they're not buying more.
They're waiting though. No, they're I don't want to give too much disclosure because you guys should have filled in, but the considerable amounts of cash, and they're waiting. And there's one sector that they're both really hot on. I'm not going to tell you guys yet because you should have tuned in yesterday. I gave you 100 different times to tune in from 1 to 1:30. I'm going to have Wayno write up some articles on it, but Yeah, very cautious on the FANG, very cautious on a lot of these stocks, and so they're waiting to buy the dip, but we'll wait for the dip.
Chad's mentioned this as well. I want to give Tim Quasman credit because he did mention this on Monday's show when he was on. T+2 would be today, right? Because the last day of the quarter, no, yesterday, because the last day of the quarter is tomorrow. So he said that could factor in here. People would want to get their selling out of the way, so their books are totally clear by the end of the quarter. Since you mentioned Kathy, I brought up the Daily Arc email for the first time in.
What'd she buy? What'd she buy?
I don't know. I haven't looked at this in over a month.
Well, it doesn't move stocks anymore, so it's
I
hard
know.
to get interested in it as a trader.
I don't know what's new here. I see some Tesla selling. 300,000, more than that. More than 200,000 shares of Tesla sold yesterday. We know she's actively trading, so I don't know what's new here. Full disclosure, I'm just bringing it up for the first time in a while. I see some, she's still buying Coinbase, still buying Robinhood.
Usual culprits,
the usual stuff.
She likes stocks trading 50 times sales.
Yeah. Hey, let's move on to Micron here. Okay. This was the big earnings report from the after hours session yesterday. Their earnings were okay. It's not about that. It's about the guidance. It's about the forward-looking statements, and that was not what the street was expecting. Again, the earnings for the prior quarter beat, the sales beat, but the guidance was very light. They gave an earnings per share range for the current quarter of $2 to $2.20 versus an estimate of $2.61 per share. They gave a sales range of $7.4 to $7.8 billion versus an $8.6 billion estimate. So they missed decidedly on both EPS and sales for the current quarter guidance, and the stock got hit off of that.
It bounced where it should bounce, Joel. That's the one good news. You have a triple bottom. If you're going back and you know where I'm looking there is this August. In August, you had three lows right in the same area, called $69. We'll round it. And we bounced right in that between 68 and 69 handle. So we bounced right where we should. That's your support. That's your critical support. I mean, the trend is not your friend here. It looks broken. It's been coming down. But overall, I mean, you've had, the stock is not expensive. Again, we know this is cyclical. I've been burned with Micron before saying, yeah, it's trading 5 times earnings. It's good. And then, the cyclicality to the business falls apart and the earnings come way down. So we know the earnings are very volatile with a stock like Micron. So you can't just say, oh, yeah, it's trading 5-6 times earnings. I want to buy it. I kind of still do want to buy it, but I wouldn't want to own it below 68. I'd say 68 would be my stop out. So again, if you're buying stocks, you always want to look at your risk, then your return. If I was buying this dip today, not that I am, because I don't think I'm buying any dips today, but if I was, I'd be leaning on that 68.5 low.
And for me, I have no interest in trying to buy this until it gets above 73.10 and holds.
Guilty until proven innocent. Me and Joel on the same page here.
Yep. That was a close from yesterday. It's just been whipping around. There was a bunch of lows in the 73 area, 73.10 close, street leaning the right way. Well, the market was going down yesterday. So to buy the dippers, they're going to come in today. They're going to come in hand over fist. They're going to get this green on the session, and then it's going to be a reset. So that's what I'm looking at in Micron, MU.
Any other stocks moving off this morning? Chip stocks? I imagine.
I've already reported, right?
That's it. Micron's like the last to report. We are literally we can't get close to the end of the quarter than right now, September 29th. So we're ready to go on to the next quarter. We're looking ahead to the next quarter. So, obviously there's other chips, lots of other chips, but I don't think there's much response here.
No. All right. Well, let's move right along here. Here's one that I think this sets up nicely for a sell. Lucid Motors, LCID.
Selling the rip, Spencer.
This is a stock. This is a stock that has gone this month. Lucid's gone from 16 to 20. Well, it got to 28 the other day, but it got to 20. It got to 27.
Yeah.
Got to 27 this morning. From 16 to 27 this month, off of news that was already known. The news here that you're probably seeing today, or maybe you saw it yesterday, I don't know, because they had their production day, is yes, we have started production We are going to actually have cars come off the line. We're going to deliver those cars to the customers that have already paid for them. And this is great news for us. This is not even new. They've said this. They've said October deliveries, October production. That's what they've said. They said deliveries to begin in late October. That was always kind of known. Again, from 16 to 24 in 3 weeks, or I guess 4 weeks. Sell, Pat.
And this specific pop this morning up 5.75% is what Mr. Elconin was alluding to. This is from being the CEO being on CNBC. So the CEO pops on CNBC, stock rips from 24.5 to 26 during the interview. It's still holding on to those gains. I love fading CNBC pops. It's one of the easiest strategies. Doesn't work 100% of the time, but I can say confidently it works more than 50% of the time. So if your strategy works somewhere between 50 and 100% of the time, it's a winning strategy. Fading CNBC pops is a winning strategy in the long run. And buying CNBC pops is a losing strategy in the long run. On any individual stock, they can do anything. This is a storied stock. The stock could travel. It hasn't given it back. So that's the one good thing, is that it's been holding up for a long time since that interview at 4:30 yesterday. But again, this is the kind of stock where I'm not chasing it up, and yeah, I'd be more inclined to sell the rest.
Okay, well, let me just say this for the people that are really bullish Lucid. That's fine. Lucid could be the next Tesla. I have absolutely no idea. If it is, though, then the best thing that you could probably do is dollar cost average the entire time, right? Take emotion out of it. Say to yourself, I'm going to buy this stock. I'm going to buy whatever, 50, 100 shares every week or whatever, every month. Do it, whatever it is you want to do, and do it every set period.
If you really think it's Tesla.
If you really think it, then that's fine.
Yeah.
But don't.
It's not Tesla.
That's how you do it. That's how the best investors did Tesla back in the day, right? They just DCA'd their way in. They scaled their way in. That's what you should be doing too.
If you like it.
If you love it. If you love it.
It has a market cap of $42 billion. So it better be the next Tesla, because you're paying for it. You are paying for it. $42 billion. How many cars are they supposed to deliver?
Oh, I'll tell you. In October, okay, so they have 13,000 bookings, right?
They don't even have any sales yet.
Well, that's what that is.
The stupidity of this market is just unbelievable.
But it's a soft number, right?
I mean, but this is the market we're in. It's a storied stock. A $41 billion, they're saying, that this company is going to be better than Ford. And, it's a bad comparison. I did this comparison 5 years ago with Tesla, and I got burned badly on it. But, I mean, Ford's market cap is $56 billion. Lucid is $41 billion. So, I don't know. You're saying that this company is basically going to be number 2, or whatever in EV because they don't have anything else. I think it's insane to pay $41 billion for Lucid. That's just my opinion. I think it's insane.
Are you guys?
I know Fisker. People throw Fisker back in my face just before your point, Joel. People throw Fisker back and say, "Well, you're long Fisker." Fisker's market cap is $4 billion. So, and they do have the deal with Magna. So I'm paying 1/10 of the cost of Lucid. So that's, if it's a $4 billion market cap, it's like, oh, okay, well, there's some growth. $41 billion, they're already pricing in some serious sales. So that's a big market cap, man. That's a big market cap.
Are you guys ready for my best Dennis imitation ever?
Yeah. Oh, yeah, I'm so ready.
Are you ready? Okay.
Yeah.
All right. Go to, I know you want to show me while I'm doing this. Go to the 4 a.m. pop. You have Kramer on. The company's on Kramer. You wake up at 4 a.m., right? And you get a pop to 27.18. Folks, if you're waking up at 4 a.m. and you're buying the Kramer news, you're doing it wrong.
Yep.
You are absolutely doing it wrong. And that opened up it got right close to your 2-day high, which was 27.27. So if you're out there, you might have missed it. Now you've leaked over $1 from that level. You're doing it wrong, folks. If you're getting up and you're chasing stocks at 4 a.m.
Yeah.
Now we've already leaked over $1, right? And you're going to have to you're off the open. You're going to have to take out yesterday's high, and now you're 50 cents off that. So I'm looking at that as resistance, and then the extra major double important support is that low from yesterday at 24.15. Once you crack that, you say hello to 22. So That was my Dennis rant on.
I have one more
buying the
comment on
4
this too. Commenter in the chat
Wow.
said Lucid is the next Ferrari.
I've upset some people in the chat, I think.
No, wait. Somebody in the chat said Lucid is the next Ferrari. So so that's okay. Okay, so let's say it is the next Ferrari.
How many people drive Ferraris?
Stop. So Ferrari's market cap which is race, awesome ticker symbol by the way, is $53 billion. Lucid is 41. So it better be the next Ferrari because it almost has the same market cap as Ferrari.
So
there you go. So that's the upside. If you think it's the next Ferrari, well, okay, it's got $10 billion worth of market cap. It can go up 20%. If it turns into the next Ferrari, it's got It's got $10 billion worth of upside.
So you're talking 18%, right? About 18%.
Yeah.
Upside,
if it's not the next Ferrari, it's going down a long ways. So I think the risk reward, I might be wrong. Maybe this is the next Tesla. Maybe it's going to have a $700 billion market cap, and everybody's going to be driving Lucids or whatever the hell they're called. And
you know what? When I'm in my when I
air.
move into my metaverse, okay, I'm just gonna. I'm not gonna have a car. I don't care about electric cars. I'm just gonna put on my virtual reality glasses, and I'm gonna say, I need to go to the store. And then a driverless car, I don't know who's gonna make it, is gonna show up at the front door, or and they're gonna take me there, and then I'll do and it will wait for me, and then it will take me home. I mean, there's gonna be less cars on the road. Who's gonna be making them? I don't know. But
it's all going to be Lucids and Teslas.
Apparently so. I want to get to this one other stock real fast, and then we'll get Joel Kulina on from Wedbush. Dollar Tree, if you're seeing it trading up this morning, they added to their buyback this morning. They added a little over $1 billion to their buybacks. Are just, it's been a record. This shouldn't be a surprise, but it's been a record year for buybacks across the board.
Microsoft.
Did you see the first Dollar Tree headline before the buyback? Go back further in your pro.
Price increases. What combo store? What?
They're actually
Dollar Tree.
They're looking at increase. They're checking.
Dollar Tree Plus. Hey, $1 and up.
Yeah. So you got Dollar Tree jacking prices too. Inflation got issues when the Dollar Tree's looking at going to $2.
Yeah. That's it.
You know what? Dollar Tree has the power to pass these costs on, though, I believe, because now they can just change their name to $2 Tree, and people are like, I go in there and get something for $2 still. So you know what? Dollar Tree actually still has the power to pass this through, and they are going to do it.
What about Five Below? Are they going to change their name? I think Five Above.
They'll just change the name to 10 Below.
Or Five Above.
So they're okay too.
Well, it's like in New York where they have the 99-cent and up stores.
We're leaking bad.
Holy cow, that guinea pig indicator. Yeah. It's already up 10 handles. The guinea pig just gave his opinion 20 minutes ago.
Look at this.
That guinea pig's good.
Who's listening? Don't be hitting bids, folks, when we're talking on the show. That's not fair.
Yeah, we want to hit these bids when we get done talking on the show. No, just kidding.
All right. What a time to be alive. The guinea pig is driving the market.
The guinea pig indicator, man.
The Yankees are winning because they have a pet turtle. It's just
are the Yankees going to make the playoffs?
Yeah.
Jay's going to make the playoffs.
No, I don't want to talk about it. I don't want to jinx it. I don't want to talk about it.
That's how much. Baseball is for old people, and I'm old. And I couldn't even. Oh wait, the Dodgers, right? The Dodgers got the best record in baseball. Or the Giants.
No, the Giants do, but it's not either there because they're both going to be in. It's 8:35. Let's get Joel Kulina on.
Save the show, Joel.
Save the show. Joel asked if his appearance on our show is going to mark the bottom. So let's ask Joel that question. Joel, good morning.
Hey, what's going on, guys?
Joel is the head of technology and media trading at Wedbush Securities. Joel, is your appearance on our show this morning the bottom?
Well, more of a joke. I think I had a media appearance last Tuesday following the Monday bloodbath. So I guess it's a trend, right? Sell. I guess that the guinea pig's right. Sell the rip. It worked last week. But no, I feel like it's almost become a little bit of a broken record. And with tech, I think coming out of Labor Day, you really start to see a shift in mentality and price action. As you said, rallies are really starting to be sold. And I think the epic Apple ruling back on September 10th as they say, was kind of the straw that broke the camel's back. We know that these mega cap tech stocks did a lot of heavy lifting in late August, early September, while the technicals and breadth was pretty terrible underneath. And I think it's pretty telling. Oddly enough, going back to last week and even yesterday, I mean, yesterday was one of the quietest sell-offs I can probably ever remember, especially with the NASDAQ dropping, 280 basis points. There was just no panic. I don't know if guys were positioned for that type of drawdown, but, given the long list of names down, anywhere from 5 to 8%, I don't know how you can be fully, ready for that type of move. But it was all fairly orderly, which is the positive. The negative is the technology sector is still facing the same myriad of headwinds. Coming out of a pandemic, these tailwinds are continuing to fade. You have rising yields, and that's really the reality. And now they throw in the supply chain bottlenecks, which are clearly going to be a major talking point over the next 6 weeks, which clearly impacts tech. And that's going to impact sales, which will probably trickle down to impact margins as well.
To your point, Joel, I keep coming back to last week when we spoke to 3 different people that all trade on the floor of the exchange, and they said that last Monday, the 20th, was like just as orderly and non-chaotic a sell-off as one can have. It was just totally normal, and I can't get that out of my head. And remembering that and seeing what happened the back half of last week, and it's hard for me to come in here and say, "Oh no." And be that scared, honestly.
Yeah. I mean, it's above my pay grade to go too in depth on it, but I mean, market structure, it's a lot different than the market from old, right? I mean, we know retail's become a bigger percentage of the daily activity. Quant has become a bigger part. ESG is obviously one of the most actively managed strategies out there as well. So there's a lot of different market structure, just different. And I don't know if that's leading to active managers, at least hedge funds, just activity's down. Guys aren't turning over the books like they used to. They're trying not to overthink these kind of 24 to 36 hour drops, because the past few years, this tape has told us if you overthink these near-term moves, you're probably going to be chasing the thing higher, 2 to 3 days later, which is, sad. But that's kind of I think that's what leads to kind of the more quiet, sleepy activity the day of the big first initial move.
What's interesting, Joel, is yesterday was I don't even know the last time this has happened, and you observed this as well. Was the market was down yesterday, but what was not down was the video game stocks, which have been down all year, it seems like, and yet on a day when most stocks are down yesterday, Activision, EA, Take-Two, into the green. Talk about a plot twist.
Well, and I'll talk of the video games, but also keep in mind, I think FXI, right? The China ETF finished up 10 basis points as well. When was the last time you could point to NASDAQ being absolutely carried out and you have the video game stocks trading higher? I think it's finally some maybe signs of supply exhaustion, subsiding of hate selling, and maybe investors just kind of rotating, looking for names that have come a lot more attractive from a valuation standpoint. Fundamentals haven't changed that much for the video games, right? We know younger generations are still spending the bulk of their free time, playing in front of consoles and TVs. But yeah, so like Activision obviously was one of the outperformers. They have the Call of Duty launches November 5th. EA has the FIFA 22 launch coming on this Friday. Also Battlefield, their next Battlefield games going into beta on October 8th. So we also got a few positive kind of, talking points. But again, it feels like, winners were being sold and guys were looking for names that have kind of lagged significantly. And I think a few other names you can fit in that camp would be names like MasterCard, Visa. If you do see an uptick in consumer spend, travel, I think you want to be buying those type of names, into the momentum, not trying to catch a falling knife, but video games and old school kind of legacy payment, credit card names, they've been massive underperformers within tech. And I think you want to be buying them as they head up versus trying to catch the falling knife.
So there's a chance then maybe if we were to keep, if we were to keep selling off, there's a chance maybe based on yesterday that you see these stocks, these areas that have lagged, outperform relative, which interesting.
I think that's a safe play. If you're negative on tech and you need some long exposure, that's probably it's not a bad place to be. So you look at video game stocks, and obviously where you want to avoid are the names you guys discussed earlier, right? To kind of the Kathy Wood, elevated multiple, sky high valuation type of names, and even semis. I think semi fundamentals overall are still very healthy for the most part. But you have to be a lot more selective within that complex. But I mean, yesterday it's just like regardless of what the story was for any chip stock, it got carried out.
Yeah.
So, but I think you can look within the semi space, look for the winners, and kind of avoid names, i.e., like a name like Micron was just reported last night.
Well, I was going to ask you about that next. I mean, so you're just hands off Micron here.
Yeah, I think so. I mean, the stock is underperformed the stocks by 20% year to date, and that was into the print. So I mean, there's really nothing telling you there that things are going to change anytime soon. They gave a very disappointing guide. Their capex is going to be significantly elevated year over year. I think 20%. Management's trying to put the bullish spin on that, but I can't remember a time where you're seeing elevated capex. How's that not going to fall down and impact margins? And then also PCs are going through some issues, especially given the ongoing shortage kind of cluster which is out there. But Micron, I mean, I just don't see, pricing's headed one way and that's lower. And you have to think some of their bigger customers, i.e. hyperscale, could be really licking their chops when it comes to next round of contract negotiations. The memory players don't have much bargaining power, that's for sure.
We're on the line with Joel Kulina, head of technology media trading at Wedbush Securities. Let's shift over, to the media stocks here.
Yeah.
Comcast, I mean, when a company comes out and says, hey, we don't have some good news, it goes down and it's continuing to go down. I'm just looking at the media landscape here. Disney lowers subscriptions. To me, there's just too much out there. And I don't know if there's going to be any huge winners here. It's just, I haven't looked at Viacom and I haven't looked at all these different things, but I'm not cutting the cord anytime soon with Comcast. I love it. Like every time I call customer service, it's like, we love you. You've been a customer since 1992.
You're probably their last. You may be their last subscriber, and you're
yeah. But you know what? Every 6 months, I call and I complain about my rates, and they take them down. So I do have that. But is it just like is there going to be any big winners in this? I mean, Disney's struggling, Comcast is struggling. Like, to me, it's just like no big winners.
I like where you're heading with your thought, right? I mean, it's I've mentioned it before and ages ago, and I think you're right. It's subscription fatigue. How many different subscriptions can people have? And I think younger generations are going to be able to be a lot more intelligent and more. I don't know what the word I'm looking for is, but they're going to be able to hop around from sub to different platform on a monthly basis, keep control of what they're paying for every month. That's the key, right? I actually just dropped HBO Max up here because I want to watch something else on a different platform on FX, I think, and so I think that's going to be the key. If you get used to kind of handling your subscriptions in an intelligent, economical, sensible, manner, that's the risk though, right? And that leads to elevated churn. So yeah, Disney warned, you have Comcast, the commentary out of Goldman's Communicopia conference last week overall was very negative. Disney and Comcast are probably two highlights, but can't point to anything, that really stood out. You have value guys trying to defend the likes of Viacom, Discovery. I mean, pull up those charts. I mean, we know they got caught up in the Billy Wang Archegos blow up block stock debacle back in what feels like 18 years ago. I think it was February and March.
What stock did you mention?
Viacom.
And Discovery. I mean, those block stocks have not done anything for months. And there's, again, nothing about that chart's telling me you need to go out. You need to own these stocks in your portfolio. I just don't see what's going to change the narrative. And I'll be honest with you, if the stocks move and they're 20% higher in a week from now, there's going to be a real catalyst that I'd rather be buying it into the momentum than just trying to buy something that's been dead money for a vast majority of 2021. But you're right. Funny, I was going through the FANG charts yesterday, and it's worth anyone just checking those out. Like obviously, Amazon's, a false breakout back in July. Facebook, a pretty ugly puke below its 100-day. But then you look at Netflix, still within striking distance of all-time highs, and so that's still your winner. Even though they missed on subs back in July, the stocks come back with a vengeance, and obviously they have a very strong second half slate. They had an event earlier this week talking up Stranger Things 4, a new Ozark series.
Oh yeah.
I mean, I'm in the camp. I love Netflix. I mean, especially if you're a documentary type of guy, they have some good music stuff. I've been listening to a Skinner thing,
Leonard Skinner?
a little bit this week. Yeah, I get about 20 minutes a day where I can kind
I
of
bet Leonard Skinner.
dip into a doc. So I mean, Netflix is the clear winner, and
Wow,
it's
the
it's pretty
content's
amazing.
superior
And then you
right
remember Disney warned about not just subs, but disruption development delays, which obviously is even more supportive for Netflix in terms of, and Seinfeld's coming October 1st. That's going to help keep churn low. A show
Right.
like that just helps keep churn very low.
Yeah, I think what actively canceling and re-upping your streaming subscriptions is going to be to this generation what playing credit cards for the points are to like our parents' generation. Because like my dad has like at any given time like 15 credit cards. He's always canceling and adding new ones to get the points and the rewards.
Oh,
and
that drive me crazy.
and he's got and he's really into it. That's like his hobby.
And
My
our
hobby,
our generation's worried about security. We're actually worried about security. Older generation, like,
I
the
know.
Niners Club going, they don't care.
Yeah. My hobby is going to be our hobbies are canceling our subscriptions.
Yep.
If you time it right, you can get a free week now when this new show is out. So, yeah.
Let me go to Netflix here. I mean,
Yep.
how's their expansion going? I mean, because I see they better keep expanding, right, and getting more customer base, or they're just going to be forced to raise prices. I mean, is there going to be a point where, or is their content just so superb that people are just going to keep paying up? I mean, how much have they increased their prices?
It's funny. The story goes in cycles, and obviously, but I think right now, I mean, they're pretty much one of the best positioned I feel like they've been in quite some time. They've been able to absorb all the recent pricing, hikes that they put in over the last few years, and there's still pricing power in the model. And I know what the sell side's been, talking up this week at least is continued, coming out with hits from the non-English original content. I haven't watched it yet. It looks a little, creepy to me, but a Squid Game.
I've been meaning to get to that.
Trending #1 everywhere, I think,
Yeah.
something like that. And even they come out then with like the untold series stories kind of program, and you have all these little sports stories that people aren't really familiar with, which has been a hit. Whether it's been the hockey one is ridiculous, crime and penalties with the mobbed up team in Daredevil.
Oh, Dennis, do you know about
My
that
brother-in-law was just telling me about that one last night. It's on the bucket list now.
Can't believe it actually happened, but it did. I never heard about it. But they keep on reinventing themselves with these other shows, and then but it's obviously it's not a trade probably your audience is looking to do. It's obviously become a relatively boring name. I think interesting. Take a look at some of these Chinese internets. We've talked about them before. Me, along with every other fast money guy out there, has got their hand cut off. But again, I think you look at the relative outperformance yesterday in Chinese internets. Overnight, the big Chinese tech index only fell 80 basis points versus the NASDAQ, falling 280 basis points. The K-Web's up another 1% last I checked today. So I think you start seeing continued relative strength from these Chinese internets. I think it's given us a clear signal. Start dipping in. Maybe keep tight stops. But we know there's long-term value there in Alibaba, Tencent. Again, this regulatory cycle is longer than anything we've seen before out of Beijing. But companies are starting to fall in line, and that's the key, right?
Joel, I want to buy more Alibaba. I have a little piece in my portfolio. It's like at a 6-year low, I think, is where it's approaching here from a valuation perspective. It looks very attractive, but then I think, well, they're just like so attacking them. I don't know. Like, are the earnings going to start dropping? Like, are their earnings numbers going to start going down because of of what they're what the communist what the China Communist Party is doing to the company?
Well, I feel like a lot of the negative and the downward pressure on the multiple and estimates has been priced into the stock at this level. Now there's some reports last week that the IPO may be back in the works as well. And I think it comes down to Beijing has a goal, right? Like they obviously want their tech conglomerates to fall in line. And if you don't listen to Beijing and what we want to do, we're clearly going to punish you. And their number one goal is punishing the West. And they've done that impressively, to say the least.
For sure.
But again, like I know Tencent's opened up their platform to some of the competitors as well. You are starting to see signs that people are falling. I mean, I love to see Jack Ma walking around, right? That would probably be the big catalyst. So maybe look to Tencent as a better play, because who knows where Jack? Again, who knows where that guy is right now?
It's like, where's Waldo?
But I just can't help to think. Again, you're looking at the price action. They're making higher lows. the regulatory headlines are subsiding. Obviously, Evergrande's taken a lot of focus away from the tech, onto the property, onto the property bubble, which has been imploding. But I think if you're looking for near-term trades, unless you think the world is falling, I mean, China's already blown up, right? These stocks have blown up. Could you imagine if our tech names dropped 50% or whatever it was? I mean, in a line somewhere.
I shudder to think what would happen if that would happen. But
you'd all come to Canada. That's what you do, I guess, right?
Yeah, well, you know what? We're half Canadian right now. On the show, we should get picked up by CBC because we have,
That's it.
Actually, we're more than half.
Broadcasting Corporation.
Why? Oh, because I'm half Canadian. That's right. So
Yeah.
wow. So Spencer, you're the lone American here. No, I just want to ask you before we let you go. We're talking a lot about the end of the quarter. And I know you're not talking to a bunch of pikers out there at Wedbush. You're talking to some people that have big holdings, and it takes them a day or two or a week, to move in and out of stocks. I mean, what's their outlook for Q4? I mean, we had one hell of a year. We've had off the March low, or they just this Q4, they're just going to ride off in the sunset, make a new all-time high on Christmas Eve, or do you feel a little bit of caution out there in the institutional client base?
I mean, it's been a bizarre year to say the least, right? And the bulk of my clients are long short, hedge funds, and it's been an impossibly difficult year for alpha generation, to say the least. I mean, you go to the Reddit implosion, then you have Billy Wang and Archegos blowing up, which has really impacted how guys use leverage. And then we've had the China, regulatory assault, out of Beijing. That's, blew up a lot of guys, P&Ls as well. And I think one of the biggest issue is that these long short guys, especially, they can't run these concentrated short books anymore. There's just too much risk that amazingly just didn't exist, 10 months ago. And so guys want this year to end. It seems like the bulk of people are up low single digits seems to be the norm, which is obviously trailing the benchmarks significantly. People want this year to end, but you said, I don't know. Like, we look, what have we seen so far in September, right? We had the Apple Epic ruling, which kind of could upend, two of the biggest tech companies, in the U.S. with Apple and Google and the Android store. You've had almost every airline in the world cut their guidance. Had a slew of industrials come out and warn on component shortages, rising costs, et cetera. Micron last night, that could be the trend. So I think people want to wait almost to what the tone of earnings season is going to be like. So I think we have to wait to probably the third or fourth week of October. Netflix, I think, kicks it off for tech on October 19th, but it's really the following week when you hear from the more important companies, Apple, Alphabet, Microsoft, the semiconductors across the board. So there's a lot of caution is to say the least. Guys are trying to avoid the blow up. And I think that's why you're seeing people, position. Guys are just being a lot more nimble. They're not trying to overtrade, overthink things, and let this year end and hopefully greener pastures in 2022.
Joel Kulina, Wedbush Securities. We're having way too much fun, but we got to let you go. Thanks a lot, Joel. Always fun to chat.
All right, take care.
All right.
I got to tell the Leonard Skinner story.
Now?
I've never told this one.
Okay.
Okay. So the band Leonard Skinner, it was named after their gym teacher. Leonard Skinner. You didn't know that?
I thought it was the principal, but whatever.
Well, principal. I thought it was a gym teacher.
Who cares?
Anyways, this is, I don't know how many years ago, down in Sea Island, Georgia. Lisa has a conference. My buddy Ira flies down, and we're golfing while Lisa's at the conference, and we decide to go check out the town. And so we're in the town, and we go to this bar, and Ronnie, one of the Van Zandt brothers, is singing at a bar. All right. And he goes, I just want to give a shout out to Leonard Skinner for showing up tonight. And Ira and I turn around. We go to the back of the bar, and there's this older, heavyset guy with this big gray ponytail. And we go up to him and we go, oh man, we're so happy to meet you. And what was it like being around those kids in high school? And he looked at us, he goes, trouble. And then that was it. And I don't even think
that was the principal or the gym teacher?
Was it the principal or the gym teacher?
Wait, you met the actual guy?
You met the actual Leonard Skinner.
Yeah. Yep. And it was like pre-cell phone. I mean, I probably
Well,
had a
that's
cell
awesome.
phone, but I
Oh,
probably had like
man.
a bag in my car with the cell phone, so I couldn't do a selfie or anything with them. But yeah, I met the actual Leonard Skinner.
Wow. So they're saying in the chat it was a gym teacher, apparently.
It
So,
was a gym teacher.
all
I
right.
know. One of
All
my
right.
favorite bands of all time,
Oh,
man.
Wow.
unbelievable band.
Incredible.
Okay, quick.
Freebird. Let's play
We
Freebird.
got, let's not, we'll get in trouble. 5 minutes before
Oh,
we
we
will.
the 5
We're
minutes.
good at
before-
getting in trouble.
5 minutes before the end of the show, 4 minutes now. Do some ticker time. Let's do here because I saw a few people mention Agree, GRE.
I gotta do it.
Oldsupport.com is getting a rating this morning from B. Riley. They're giving it actually, I don't even remember what they gave it. So they gave it a buy rating. Yeah.
It
buy
was
rating.
$76 price target they gave it.
Yeah,
76
For what?
bucks.
What stock?
$78.
Is this the old support.com SPRT that did the
Oh,
move and the is it
jeez.
what was it, a reverse split or something where they took most of your shares away? Because
I don't know.
when we didn't like this on the show
Agree.
1 month ago, it was equivalent to $370, and I said I'd sell it. It's 30. It's fallen 90% since I said I would sell it.
I just want to
a
show
month ago.
I just want to show my Thinkorswim chart, which I've never seen this kind of a chart, this pattern before. Is this in the textbooks? This pattern? I don't quite know.
That's wrong. That's
Let
a
me
wrong
see.
chart though, because
No,
it
it's
was
not.
an adjustment.
No, I know, but it doesn't have the adjustment. So
Yeah, so you're
right.
missing the adjustment. It's literally trading at equivalent of like $3 or something.
Yeah.
From where it was at 30.
Who
So there's an
was
adjustment in there.
All right.
who was the firm?
B. Riley.
That did it?
B. Riley.
Can we cheat them and how?
Yeah. that's
No,
fine.
they're okay. You know what? Some of the little boutiques like B. Riley get a lot of, because they don't feel like they have as many conflicts of interest, and you'd be shocked at how, and they cover some of the smaller stocks, some of these smaller boutique firms, but they can really move stocks. I mean, this is up 30% this morning because of this rating. 100%
Yeah, well, for
because
sure.
of this rating. So I
I'm
don't
not
know. Like the
touching
thing
this
was
one.
300, the equivalent of it on the adjusted chart, which mine is adjusted. It was $375 a month ago. It's $30. Can it go to 40? Sure, could. I don't know where it's going. This is too hard to trade. I tried to buy it last night when I saw the rating come out, and it was like people were lifting 26, and I'm like, I'm not paying up 10%. I should have paid up 10% for it. I knew it would move on it. I saw it, somebody tweeted it out, and then you see the rating, and you're like, 26. Do I want to pay $2? And then I'm like, 27 goes, 28 goes. I'm like, okay, I should have bought 26, but $30, and I don't know. This thing could go anywhere. I'm not even going to comment on it at this point in time. Right. I was a seller at $370. I'd still be a seller at $370.
Okay, I stand corrected. It's do we cheat them and how, not can we cheat them? That's the economy. Did you see what I put up on my on the upper right chart? No touch. No boss, no technical analysis.
Not touching it.
It does not deserve my technical wizardry.
Quickly from Martin in the chat, he wants Kinder Morgan, KMI. Either of you have thought?
KMI.
Dividends nice if they still like dividends. It's rallied up. Oil services. I mean, I don't know. I don't like oil stocks, so that's one reason not to own Kinder Morgan. 6.36% dividend is nice. It hasn't kept up with some of the others, but I think it's a more conservative play. I like it, from a technical basis, a little pullback. It's been moving though. We've had a big move. It's a big move for Kinder Morgan.
I mean, relative strength on this thing. Crude makes a new high for the moon. I mean, I know they're probably a little bit more diversified, but they've just been around forever, paying that fat dividend. So, buy it on dips, dollar cost. DCA. It is Spencer coined a new term on Wall Street.
What? It's not a new term.
Yeah, DCA.
That is so not a new term. Are you kidding me? Dollar cost average? Come on.
No, dollar cost average is not, but you would like the fancy, DCA it like you're some big fun.
You guys. Okay.
We're being too hard on Spencer.
Okay.
I like the dividend, but I need to pull back.
All right. We got to wrap it up, guys. It's 9:00. The Benzinga.
They're giving me heat on Fisker again.
Why do you guys give Dennis heat? Why do you guys give
Fisker? $4 billion market cap. Lucid, $40 billion market cap. It's 10%. So Fisker is still speculative. Lucid, they're pricing in like it is the next Ferrari. If Lucid was a $4 billion market cap, I might actually be long into my speculative portfolio. But it's not. It's $40 billion. It's 10 times more. Is it 10 times better than Fisker? We don't know. I mean, Fisker is still at least a speculative play. When you're buying $40 billion companies, is it going to $400 billion? I don't know. But could Fisker go to $40 billion and become Lucid? I think there's a better chance that Fisker could go to 40 billion than Lucid go to 400 billion, and that would be the same thing. It'd be 1,000% gainer.
Okay.
But speculative capital.
Hey,
only the same.
Spencer,
Big
they
difference.
gotta go. Dennis, call
Yes.
me if your phone's working. Call me after you're open, okay?
All right.
Okay, everyone have a great rest of your day. Smash that like button, please. Let's get this. I haven't even looked at likes today, but I've been distracted. So hit that like button, and please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. The Benzinga Small Cap Healthcare Conference is live. We're going live right now, right when this show ends. The stream will redirect to that stream, and you'll see Brent, you'll see me, and we'll be on, and that's going to be it. So everyone have a good rest of your day. Go look at the open, stay green. See you at our healthcare conference.